Lithium Americas stock ended Friday at $9.04 per share, up $2.18 on the day, a gain of almost 32%. In after-hours trading, the stock gave back only 1 cent, essentially holding its gains. This marks the third major upward leg in the past week, following the official confirmation that the United States government will take a 5% equity stake in Lithium Americas and its Thacker Pass joint venture with General Motors. In this weekend update, we will recap what happened, why the stock has moved the way it has, and what investors should be watching next as the story shifts from speculation to execution. The first piece of context is the government's involvement. Earlier this week, the Department of Energy amended its existing $2.26 billion loan to the Thacker Pass project. As part of that amendment, the United States government will receive a 5% equity stake via no-cost warrants. This stake extends not only to Lithium Americas but also to the Thacker Pass joint venture with General Motors. General Motors remains a 38% partner in Phase 1 and retains offtake rights to the lithium produced. The Department of Energy has also allowed an initial draw of $435 million from the loan and deferred roughly $182 million of debt service over the first 5 years. These changes are designed to strengthen the financing package and protect taxpayers. This combination of a major automaker and a federal government stake is unprecedented in the U.S. lithium sector. It signals that Washington views Thacker Pass as a cornerstone of the domestic electric vehicle battery supply chain. The confirmation of the stake transformed Lithium Americas from a speculative development story into a strategic asset. That shift has attracted new types of investors and forced a revaluation of the stock. On Wednesday, the stock surged 23% to $7.04 on the initial confirmation. On Thursday, it pulled back 2.4% to $6.86 as traders took profits and the market began to digest the news. On Friday, it rocketed to $9.04, a 32% gain, on heavy volume. In after-hours trading, it gave back only 1 cent, showing remarkable stability after such a large move. Several forces combined to drive Friday's rally. The first is fundamental revaluation. Before the confirmation, Lithium Americas was seen as a high-risk developer with financing and regulatory uncertainty. After the confirmation, it is perceived as a critical minerals project backed by government and industry. Investors are willing to pay a higher multiple for future cash flows under that new risk profile. The second force is a powerful short squeeze. Traders who had bet against the stock during the rumor phase or who were hedging lithium exposure found themselves on the wrong side of a breakout. Some covered on Wednesday. Others waited through Thursday hoping the rally would fade. When Friday's session started strong, stop-loss orders and margin calls forced more covering. This forced buying accelerated the rally and fed on itself. The third force is fresh institutional and retail entry. Many funds and individual investors prefer to wait for official confirmation before buying. Once the stake was confirmed and the stock held its gains, those buyers stepped in. Their purchases added to the upward pressure created by forced covering. The fourth force is momentum and algorithmic trading. Breakouts of this size on heavy volume trigger automated buying programs. Once volume and volatility cross certain thresholds, quant systems designed to buy strength step in. This can take a 20% move and push it to 30% quickly. No new negative news emerged on Friday beyond what was already known. The Department of Energy's stake is confirmed. The structure of the warrants is known in outline but not in full detail. The company has not yet published an SEC filing with the complete terms. Dilution, governance rights, warrant strike prices, and any additional conditions remain unknown. The headline alone has been enough to drive a major re-rating. The perception of financing and political risk has changed. With the United States government on board, the project is far less likely to stall for lack of capital or regulatory support. However, execution risk remains. Building a large-scale lithium mine is complex. Cost overruns, permitting challenges, supply chain issues, and commodity price volatility still matter. Government backing does not eliminate those risks, it mitigates some of them. From a technical standpoint, the $9 area is an important psychological level. Holding above $8.50 could signal the beginning of a new base. Support zones may form in the $7 region, where the breakout began. If the stock can consolidate above 8 and then push through 9 with volume, the next psychological target would be $10. On the downside, failure to hold 7 could trigger a retracement back towards 6.5. The focus now shifts from the fact of the government stake to the terms of the stake. Investors will be watching for the company's SEC filing detailing the warrant structure, dilution impact, and any governance rights the government receives. This document will allow analysts to model the company's future share count and project cash flows. Comments from the Department of Energy or General Motors could also move the stock if they outline timelines or strategic intentions. Analyst upgrades and new price targets are likely in the coming days as Wall Street incorporates the confirmed stake into their models. The broader context matters as well. Lithium Americas has become the test case for how far the United States government will go to secure domestic supply chains for critical minerals. Electric vehicle adoption is accelerating. The country is trying to reduce dependence on foreign suppliers. Thacker Pass is positioned at the center of this policy. That narrative attracts thematic capital beyond traditional mining investors. Investors should also watch lithium market fundamentals. Government backing helps, but the economics still depend on lithium prices and demand for electric vehicles. Any surprise moves in lithium pricing or EV policy could either amplify or dampen Lithium Americas' momentum. It is useful to think in scenarios. In the bull case, the terms of the stake are favorable, dilution is minimal, and Lithium Americas becomes the flagship U.S. lithium project with strong government and industrial partners. The stock consolidates above $9 and moves to new highs as clarity emerges. In the base case, the stock trades sideways between 7 and 9 while the market waits for details. Volatility remains, but the story stays positive. In the caution case, the terms disappoint or new risks emerge, leading to a retracement toward support. The key triggers to watch are the SEC filing with full details of the stake, press releases from Lithium Americas, statements from the Department of Energy or General Motors, analyst price target revisions, and sector sentiment in lithium and critical minerals. Each of these can influence the stock's next move. Friday's surge shows that Lithium Americas has moved from a speculative bet to a strategic asset. The confirmation of the U.S. stake removes a major uncertainty and attracts new types of investors. The next phase will be about execution and terms. Holding gains above key support levels while details emerge will be a sign of strength. Sharp reversals on high volume could signal disappointment or profit-taking. Investors who understand this dynamic can better navigate the volatility. A stock can rally dramatically on confirmation but still face swings as details are digested. Risk management remains important. Government involvement reduces some risks but does not guarantee a straight line up. Lithium Americas now sits at the intersection of policy and profit. Its performance will not only reflect the economics of lithium production but also the success of public-private partnership in critical minerals. Friday's 32% move and its stability in after-hours trading is the market's immediate reaction to that shift. The coming weeks will determine how sustainable the new valuation is. In summary, Lithium Americas closed Friday at $9.04, up $2.18 or almost 32%. The rally was driven by the confirmed U.S. government stake, forced short covering, fresh institutional entry, and momentum flows. No new negative news emerged. The story has shifted from speculation to confirmation, and now to analysis of terms and execution. The key levels to watch are support around $8.50, deeper support around $7, and psychological resistance at $10. The key catalysts are the SEC filing, government and GM statements, analyst updates, and lithium market fundamentals. The company has become a bellwether for U.S. critical mineral policy. Investors should expect continued volatility as the market digests details and builds a new base.